Unless you've been sleeping under a rock, you know that gold has been absolutely exploding, silver as well, and a lot of crypto investors have been getting FOMO. When is Bitcoin? When are our altcoins finally going to catch up to these assets? Are they even going to catch up to these assets at all? I know a lot of people are getting confused right now by the current price action, but in today's video, I'm going to keep it really simple. I'm going to show you why there's a strong likelihood of a catch-up trade in 2026 and why I believe this catch-up trade is actually in its very early stages right now and how that is currently evident on the charts. I'm also going to give you a run through of everything that matters right now on the charts, the levels I'm looking at for Bitcoin, how I think altcoins respond. Even towards the end of the video, we'll talk about how you can position for what is to come. But first, I want to establish the core thesis here. So before we get into the catch-up trade, why I believe that is going to happen and the metrics and the data behind it, I firstly just want to take a look at Bitcoin. It's been a few days since I've done a market update, so I want you to be fully aware of what's happening. Bitcoin, most simply put, is in a range right now. You have the range low at 81,000. You have the range high at 94,000. Now, what's very interesting is that we actually have had a noodle flip. So this is the indicator that we use in the Mars High Club. And as you can see, it was capping price on the way down. So every time it came up to the noodle, it would reject. Now, what we've actually seen over the past few days is Bitcoin finally breaking above the noodle. So for the first time, it's been able to get back above. But this is very interesting because we are seeing compression. So it's the first time it's been able to get above, but also simultaneously is testing a major resistance level. At the same time, we have a series of higher lows brewing on the chart. This, in my opinion, is very constructive price action for Bitcoin and is actually the first potential big breakup setup that we've had in quite some time. This is the first setup where Bitcoin is coiling into a resistance level. Like even this time, when we rejected off 94K, we were simply rejecting off the money noodle. This is the first flip that we're getting where the structure for Bitcoin actually looks good. Now, I'm going to keep it really simple for you, and this is also thanks to the analysis that Paradise, who's the head low time frame trader in the Mars High Club, did this morning. Great analysis. There's just one level to look at that he outlined on his chart, and that is around $90,000. You can see this is essentially the bullish versus bearish pivot level on the chart. Go and watch his channel, by the way. I'll leave a link in the description if you want to subscribe because he's doing regular updates just focused on the technicals. But the TLDR from his video today is that as long as we maintain above this $90,000 level, that is a sign, especially as we've had the daily flip and as we compress into this resistance level, that we can target potential higher prices and Bitcoin can potentially make a run for a bigger breakout. If we break down below $90,000 and start making lower lows, then the likelihood of us coming and sweeping these lows at 81, at 85, at 84 significantly increases. So I'm treating this, and Paradise is treating this, and I know Morin in the Discord, to a lesser extent, but still factored into his system, are treating this as a bullish or bearish pivot level. So to make it really simple for you guys, as long as we're above this level, the structure remains intact to look for longs. If we flip below this level, you want to be a bit more risk off. You might actually look for longs on the sweep of the lows, depending on how we react to the lows. But from a more big picture perspective, going onto the daily chart, because the chart I just showed you from Paradise is on the 4-hourly chart, this is a potential setup for a bigger breakout on Bitcoin. I'm watching this very closely because I like what I'm seeing. I like how I'm seeing higher lows, compression into a resistance, and that has happened with a noodle flip as well. It's not often you get the horizontal support or resistance level, in this case $94,000, and the diagonal or the adaptive moving average indicator lining up for a setup like this. Of course, it could also break down to the downside. That's why we are using the horizontal pivot at 90K on the lower time frames in order to assert whether we're bullish or bearish. So that is my first analysis on Bitcoin. The other analysis on Bitcoin, which is equally as important, isn't just technical. It's how Bitcoin reacts to news. So what happened was Michael Saylor came out yesterday and said that he acquired another $1.25 billion of Bitcoin at 91.5K. And this would explain why Bitcoin ran up so aggressively on Sunday night. Now, price got slammed down in the early hours of the Europe session, but what we saw since then is price starting to actually bounce again. Today's Asia session actually is positive right now. Now, there is CPI later today, which we'll get into, which could change things. Maybe by the time you're watching this, CPI will have already happened. In fact, I'm probably going to be uploading this right around CPI. That might change the fortune of the market a little bit. But what we have seen, and I think this is the most important thing, irrespective of CPI, because this point still stands. What we have seen is a positive reaction, even in the face of Saylor basically revealing that he was the one that was bidding up price, or at least, heavily supporting price. And this is a good thing because if Bitcoin completely broke down, that would show that there's no demand. But the fact that Saylor bought, there was still demand, we still are maintaining positive structure, and the fact that ETFs also ticked positive, so this indicates more retail demand, that is a good thing. What we saw to start the year was a couple of positive ETF flow days, followed by outflows around the $94,000 level. So it's good to see this has started to tick positive again. Now, hold your horses because everything so far has, sounded somewhat bullish. The only thing that I want to see, and the only thing that's making me a little bit, I don't know if concerned's the right word, but just wary right now, and aside from the fact we are into a resistance, not wanting to take on crazy risk, is the fact that the Coinbase premium is still negative. This is the premium that users pay for Bitcoin on Coinbase in the US. It's a very strong US retail indicator that shows us the appetite for Bitcoin buys or sells on the exchange. And the fact that it is still negative is not helping the case for Bitcoin right now, because typically periods where Bitcoin performs really well, it's being supported by buying on Coinbase. The fact we are still seeing net selling shows us that bigger entities alongside US retail are still net sellers. And overall, we have seen outflows this week. So what we do want to see is a sustained period, because I know at the start of the year it ticked positive for about half a day, but what we want to see is a sustained period where this actually ticks green. We see a period like we saw at the start of December where it is consistently showing a premium alongside ETF inflows. This would be a sign that demand is a bit more sticky. Right now, Bitcoin is in no man's land in the sense that, all right, the chart looks good, but there aren't these really strong material drivers which are pushing price up. Now, very shortly in the video, we're going to talk about what some of those drivers could be. It's actually macro, in my opinion, which is going to cause the next wave of liquidity for Bitcoin. But in terms of micro catalysts, we haven't seen the evidence that there has been a full shift yet. And that's what you have to be aware of. Just to give you guys an update about what's happening this week, because this is very important, we have CPI happening right now. A cool print would likely lead to a rally or at least supportive price action. And then a hot print, obviously, if inflation goes up, it makes it a bit harder for the Fed to aggressively cut rates. This would likely lead to a sell-off. So in many cases, it is a nothing burger unless there's a big shock, so I don't read into it or trade around it too much. The only thing I really do when there's an FOMC or a CPI is I de-risk my leverage positions, because you don't want to get wicked out or anything funny to happen. But in terms of spot positioning, thinking around the market, and chart structure, it doesn't change too much unless we significantly beat or significantly miss, which of course we'll find out today. The other major thing that is happening later this week is we get the ruling on Trump's tariffs. There's a 27% chance that the Supreme Court rules in favor of Trump. So the overwhelming majority, 73% chance according to Polymarket, is that you do get the Supreme Court overturning Trump's tariffs. And this is obviously supportive for the market in general. Now, the fact that there's a 27% chance that the Supreme Court rules in Trump's favor is the potential tail risk here. Because if this happens, I think the markets will react quite negatively. I don't think it would be an April situation of last year where you get, price absolutely tanking, which is what we saw across equities and across Bitcoin last April, which was actually a great buy opportunity. I still remember that sauna video where I was loading up on Bitcoin and Nasdaq in the sauna. That was a really good day to buy, but I don't think it would be like that. However, it is a tail risk which would probably send the market lower, especially because equities have been performing really well recently. We've seen a relief rally in Bitcoin. That is a big risk here. However, if you want to look at it on the flip side, the fact that there's still a significant chance, 27% in my opinion is significant. That is not, a small risk, means that prices are slightly capped, because people are still a little bit wary of this decision. So as Fefe says here, if they do strike down the tariffs, this could be supportive for price action, because the tariffs will be invalidated and the markets will finally get their much needed clarity, which eases cost pressure, corporate earnings outlook improves, and risk on flows could return to the market as a result. So there's a 75% basically chance that this happens. So that's still a very large chance. And that is probabilistically speaking, the outcome that we are going to get. And this will likely result in relief for the market. So I think if you take a probabilistic approach, this should be a positive event for the market. You have to assume that will be the case just based on the probabilities, but keeping in mind, there is a slight tail risk here, which could send markets lower. The other thing that we got today that I think is a positive step in the right direction, and you could see that the SEC chair, Paul Atkins, is saying this is a big week for cryptos. There's positivity in the air is we got the new unveiling of the crypto market structure draft bill. Now, remember, in a few days' time, we are going to get the ruling on the Clarity Act alongside this market structure bill. And if these go ahead, this would be really positive for the crypto market overall. So hopefully by the end of the week, we have good news on the regulatory front, because the Clarity Act is going to open the door for adoption of stablecoins, of RWAs. It's really, really good for crypto overall. And I will say this, even though 2025 was not the best year in terms of trading, it was really difficult, unless you were basically just buying Bitcoin and chilling, or buying, equities and chilling. Even if you bought Bitcoin at the start of the year, you would have been down. It was a pretty difficult year, especially in the altcoin front. So, people tend to confuse progress and price. They think that crypto took a step backwards last year. What I will tell you is that I actually think we took leaps and bounds in the forwards direction. I think it was a really positive year overall from a regulatory point of view. I think it was a really positive year in terms of RWA adoption. I mean, RWA's increased by over 15 billion in terms of TVL, and we are finally getting the clarity through the Clarity Act that we need on stablecoins for even more banks, institutions, funds, neobanks to embrace stablecoin rails. So this is really, really good for the market overall. So despite altcoin prices maybe not doing what we wanted, or making it really difficult to trade, this just creates more opportunity. And there are tons and tons of opportunity, and I'll get into my altcoin narratives to watch for 2026 list later in the video, opening up in specific sectors. So if you are still paying attention, because I know YouTube views are at the worst they've been since 2021, as you can see here, viewership of crypto related content on YouTube's dropped to the lowest level since 2021. I don't really understand this. I mean, I do understand it from a logical perspective. People are sick of it. People have lost money. People want to check out. People want to capitulate. People lose interest when the markets are slow. But there's just so much opportunity. And I mean, we're about to see, and I'm going to get into the thesis in today's video, the massive proliferation of metals and equities trading on on-chain perps. Can you imagine the airdrop opportunities, incentive opportunities, and potential token opportunities that open up as a result? Neobanking, especially with the Clarity Act, is going to be a massive, massive narrative. AI and AI agents with developments that we're seeing from Claude. Claude today announced their co-work software, which basically allows you to run an agent that can do stuff on your computer locally. So now you can use Claude to edit folders, extract data from folders, look at your calendar, all this sort of stuff. So agents are a real thing now that people are going to start using in their daily lives. This will eventually spill over into speculative markets like crypto. There are so many positives happening and so much institutional interest in crypto. There's really been a divide between what retail thinks about crypto and what institutions, funds, and big players think about crypto. So don't get caught up in the retail herd. Often when the herd zigs, you should actually zag, and this will end up creating big opportunity for those that stick around. This year, I'm going harder than ever. I'm more focused than ever with my research systems. I'm more focused than ever in terms of implementing AI into my current systems and workflows to extract a bigger edge. I'm building custom indicators. I'm building custom workflows. All of this stuff is going to give me a massive, massive edge. And as we're about to discuss now, Bitcoin is likely going to be leading the market, which could lead to a much bigger rotation. So I think this year is going to be full of opportunity. I really don't get the people that are clocking out right now. I think there is so much opportunity. So if you are part of the Noti gang, make sure to comment below and let me know that you are here and still pumped for a big 2026. By the way, that reminds me, before we get into the catch-up trade thesis, I'm going to pick 5 people from the last video. So Scorp, you can win $100. Wavedog, you can win $100. Fernando, you can win $100. Stan, you can win $100, even though you were negative, saying they're going to be wrong predictions. In my predictions video, even you can win $100. Even though actually, if you go back to my 2025 predictions video, because I reviewed my thread yesterday, I actually got over half of them correct. So my last predictions video was actually correct if you actually go back and look at it. So maybe do that before you comment, but you still win $100 because the haters deserve to eat as well. Brown Trading, you win $100 as well. As you can see, it's completely random. If you go to the description and look at the giveaways email, just email and prove that you actually have notifications turned on, and we will send you your $100. And of course, if you want to participate, if you've won before, if you want a chance to win, just comment on this video and you have a chance of winning, but you need to watch the next video, obviously, to see if you have won. So tune in every day. You don't want to miss any alpha. I'm not uploading daily right now because I really just want to hit you when I have stuff. The market's not giving us actionable alpha every day, so I'm just coming on when there's actionable stuff to really help you guys. So you know every video is a banger and I'm not wasting your time at all this year. All right. let's talk about a shift that's happened. Now, admittedly, it might be a bit early to assert that this is the permanent shift in the market, but there is a small shift that we've seen over the past couple of days, and that is Bitcoin has now started to slightly outperform equities and has played catch up a little bit to gold and silver. Now, this could, of course, just be a short-term move in the market, but it got the wheels turning in my head that, all right, I really want to do a section on the bigger catch-up trade because this is a very early sign that there may be something beginning, but there's actually a much bigger catch-up trade at play here, which is driven by macroeconomic variables. And I think it's really worth breaking down because this is actually one of the things that I think anchors the most upside potentially for Bitcoin this year. So the first thing I want to look at is gold. By the way, tidbit on gold. If you have the money noodle indicator, and you can kind of create your own version, but we've customized it in the Mars High Club, follow the money noodle indicator on gold because this has been the perfect risk barometer since the big breakout in August to actually base your trading off. So it's basically been following the daily noodle perfectly on the way up. And I've gotten questions in my Discord about, Mars, should I buy gold? When should I buy gold? My answer would be just follow the money noodle because it's been actually a great strategy to trade gold over time. And we actually haven't ever had a weekly close below. So pretty much since the start of the run at the beginning of January 2025, it would have signaled you to get in and it wouldn't have signaled you to get out yet on the weekly chart. If you use weekly to confirm a daily indicator, you always want to use the indicator which it adheres to the most. For example, if we go across to the weekly time frame, it is good from a macro perspective, but the problem is it doesn't retest enough. So you don't get many active entries on gold if you're using the weekly, whereas if you're using the daily, there's been many active entries. Even in the most recent retest back in October, you would have gotten another entry, you would have gotten another fill in December. Likelihood is, yes, this will come up, but you'll probably get another fill at some point soon. So that's not part of the point. I'm just signaling here that gold has obviously been doing really well, as you all know, but I wanted to give a little bit alpha on trading gold. And this orange line here has actually been in my chart for months. This isn't new. I remember sharing it in a Mars High Club AMA about my plans to buy more gold and take advantage of the breakout, and this played out. So the good thing is gold, from a macro perspective, does stick to the charts really, really well. It's actually an easy asset to trade if you're just trading on spot on the charts because of how well it sticks to structure. And obviously it's in a bull run, so you kind of have the tide going with you. But what's happened is obviously gold has been doing really, really well. Bitcoin has been just choppy and I guess doing badly comparatively. And you can actually see now we're at the point where the Bitcoin gold pair, so Bitcoin relative to gold, has hit its 2022 bear market lows. So it's performing really, really badly against gold. Bitcoin silver as well is also hitting 2023 lows. As you can see, Kabisi Letter says here, the Bitcoin to silver ratio is now down to 1.1K, the lowest level since September 2023. Now, obviously, Bitcoin is considered digital gold. Now, it's a bit different, and I would argue that as being more correlated to risk assets than digital gold. But the same conditions that are creating the gold run and creating the silver run, which is basically just debasement. Currency debasement is driving this whole narrative. Those conditions should really, really, really suit Bitcoin. So theoretically, Bitcoin should be thriving in this environment. Now, in actuality, it's not thriving. It's doing okay. Like, it's not crashing and it's had a bit of a recovery, but it's not absolutely thriving in this environment like these other assets for many reasons. But as Macro CRG says, it's not going to stay this way forever. The catch-up trade at some point in 2026 is inevitable. Bitcoin's being accumulated right now. The only question is whether price needs one last capitulation or spring before the real recovery back to all-time highs. So irrespective of how the technical setup that we went through resolves, and this can help you in the short term on the lower time frames with your trading, I believe that from a macro point of view, we are set to see a catch-up trade. Now, the benefit to gold actually running first and the benefit to silver running first is that Bitcoin's anchor has now done multiples. So the price that Bitcoin is now being compared against, or the market cap Bitcoin is now being compared against, is so much bigger than it was. I remember when gold was only 10x the market cap of Bitcoin. It's probably going to be pushing a 20x really soon. I think right now it's a 15, 16x versus Bitcoin. So the potential for Bitcoin actually keeps going up the more that gold goes up, because gold is the best comparison for Bitcoin. The best comparison for Bitcoin is not the S&P. It's not a revenue generating asset. It's not an underlying business. It's digital gold. It is a hard asset. It is based on energy. Energy in some ways is a better form, especially in the age of AI verification in terms of gold, which is obviously based on mining and production. And price goes up, and then that leads to more demand for production. Obviously, there's an industrial use and an enterprise use case as well. But Bitcoin is actually in many ways a better version of gold. No one could confiscate your Bitcoin. You have full self-sovereignty over the asset. You can't create any more. You can actually create more gold. Obviously, gold has the asteroid mining risk one day. Bitcoin technically has quantum computing risk as well, but I think we're in a good position to solve those risks. But Bitcoin is closer to gold than it is to equities. Now, in terms of how it trades, Bitcoin has traded closer to equities than gold, but I think we all know at some point this is going to flip, and for periods of time, it has flipped, and then it's gone back the other way again. It's because Bitcoin isn't a super mature asset. I'm a big believer of Bitcoin over a multi-decade span of time, and I'm a big believer that conditions like this are actually the perfect conditions for Bitcoin to outperform. And I did a tweet earlier yesterday saying Bitcoin needs to catch a bid this year. If it doesn't, we should probably all reassess what we're doing here. I have a strong feeling it will, and that's because if there was any environment for Bitcoin to perform, it's this current environment. We're literally seeing rampant monetary debasement. We're seeing risk assets flying. We're seeing metals flying. This is the market for Bitcoin to perform well. And it's been lagging because there's been Bitcoin-specific sell pressure. We've seen a lot of OG whales selling and taking profits. We have the 4-year cycle, which suppressed Bitcoin. We also had, obviously, the DAT unwinding, which happened. That was massively front-run, and then now it's starting to unwind. Obviously, it actually led equities for a big part last year. So I view this as a juncture in the cycle where it's resetting. Gold is now taking the limelight. Equities are taking the limelight. Silver has played the big rotation trade after gold, and in my opinion, Bitcoin will come next. Now, in terms of timeline of when this rotation could happen, I think you have to look to the macro cues. So in the last 3 weeks, there's been a lot of, it's technically not QE, but a lot of easing policy or factors which should ease the economy and increase liquidity in the economy, which should theoretically bode well for risk assets and Bitcoin. As Fabian's been pointing out, we're kind of in a Goldilocks zone for macro right now. So in the last 3 weeks, the Fed started buying $40 billion a month in US bills and notes. UST threw me off guard when I was reading that out. I was like thinking of Luna, and I started getting flashbacks. But it's obviously US Treasury bills, not Doquan stablecoin. Trump is calling for Fannie and Freddie to buy $200 billion in mortgage-backed securities, as you can see in this post here. Not QE has morphed into outright QE in record time, and you're bearish. Like, the amount of debasement happening right now is crazy. It's very clear Trump's strategy is like, let's just keep the economy hot. I'm only in for a certain amount of time. Let's rip everything. Let's rip equities. Let's rip, it's pretty crazy. Like, I don't know what the effects long-term will be, but he's just fully embracing this. And I think you just can't be in front of the train. You just got to step aside and just let the train go. Because if you're trying to bet against momentum, that is a tough thing. Now, Bitcoin historically has been very sensitive to liquidity. So when global liquidity is expanding like this, it's not only metals and equities which perform. Bitcoin really performs well in that environment. We know that. But the piece of data I've got here that I think is quite interesting is Bitcoin also is very interlinked with the business cycle, which is in an upticking trend right now. So you can see here the graph of the distribution of Bitcoin price deviations versus the ISM, so the manufacturing index PMI. You can see it's very correlated. So when the ISM is expanding, Bitcoin performs really well. When the ISM is contracting, Bitcoin performs badly. So if you really want to boil it down to one metric, the ISM is a very good metric in order to determine whether Bitcoin should be performing well or not. And obviously QE and risk asset performance and other factors, are also strongly interlinked, and global liquidity. But the ISM is very correlated. And we know ISM is in an uptrend. We know, and ISM is just representative of the business cycle. We know the business cycle is in an uptrend. Lower rates also help the business cycle because it's cheaper to loan money. So that helps businesses, that helps manufacturing expand. This will result in ISM increasing unless there's some sort of market shock or some unforeseen variable. This should tick above 50, and as Quinton points out, above 50 is expansion, below 50 is contraction. We haven't even hit the expansionary phase yet for the ISM, which is extremely correlated with Bitcoin performance, and it makes sense in my opinion why gold is leading. It makes sense in my opinion why silver is leading. These are, big macro assets which only typically move really like once in a decade in a really, really big way. They are taking the limelight. They are sucking liquidity out of the market. You can view that as a bad thing for Bitcoin, but actually it's a very good thing for Bitcoin, because when this rotation happens into risk, Bitcoin now has a higher price anchor than ever, with gold and silver increasing so much in terms of overall market capitalization. And we know this rotation from safety into risk is happening, because we're already starting to see the Russell 2000, which tracks the small caps, has already been crushing the NASDAQ. Actually, for the last 4 straight sessions, it's crushed the NASDAQ. What typically happens towards the end of the cycle, and I believe 2026 is like the big end of the cycle macro year. Of course, there could be rumblings of positivity in 2027, but this is likely to be the last big year. As this evolves, what typically happens is you go from large caps, so S&P, gold, metals, that will rotate down into the small caps. These are already starting to front run and foreshadow this. Then you typically see emerging markets and really riskier assets, and this is where crypto also comes in. These really risky assets tend to run at the very end and mark the blower for the cycle. And that's, I think, the moment. You'll probably see decent price performance between now and then, but I think that's the moment where you would really see a big run for Bitcoin. So I'm also focusing on equities as well. I just don't really talk about it on this channel too much, because I know you guys are into crypto. If you want me to talk more about equity stuff, I can. But my strategy with equities, my TLDR, is that I'm not putting more money in now. So my last big buys on the NASDAQ were last April, and I've DCA'd a little bit since. Obviously, if you guys know my story, I've been a big holder of Apple since I think 2018 and 2019. I made some big buys. So I had my portfolio set. I'm actually not allocating too much more capital to the portfolio. So anything I have on the side in terms of dry powder and any new income, I'm not now allocating to equities, because I think in many cases, from a big macro perspective, they are overvalued, and at some point we should see better opportunities to enter. However, I am aware that this is likely to be a macro expansion year, and I still want to take advantage of that rotation. So the way I'm doing it is through mostly trading the small caps, so putting less capital into the market. But when I am putting capital into the market, I'm going down the risk curve and I'm going into riskier stuff. And I think some of the narratives Kyle points out here is really in line. Defense, this is a big narrative this year. I have some exposure there. Obviously, AI is a massive narrative. I think pre the OpenAI IPO, there is still a bit of a trade there, and I still expect this stuff to continue to go up, even though obviously it's ridiculously overvalued. In the scheme of things, the way to think about it is towards the end of a cycle, you just dial up the risk in terms of the assets you speculate on, but you dial down the stakes, and then we'll get some proper, much more solid long-term entries on S&P, on NASDAQ, on your favorite equities, probably in 2027 to 2028. That is really where you build like a strong 10-year foundation. This year is all about just maximizing, especially through swing trading with invalidations, maximizing the blow off top in markets overall, which is what we are starting to see now. But obviously things can get crazier than anyone thinks before they end up, eventually collapsing. That's what history's told us again and again. On the list here, he also has stablecoins, banks, as I did in my predictions video. As I said, neobanks, prediction markets are big trends in crypto this year. Privacy is a big trend as well. AI is going to be a big trend as well. Obviously, metals, gold, I pointed out the strategy. Honestly, and I'll just admit, when there's a gap, I'm finding it really hard to trade silver right now. It's just absolutely exploding. It's kind of hard to justify top blasting. Then again, it was hard to justify top blasting at 65 as well. I personally prefer, I like gold, but I personally prefer the Bitcoin catch-up trade over silver and gold right now. But I am trading gold just in line with the daily money noodle as we went through. And then Kyle points out the Singapore market. I don't know much about the Singapore market, but what I will say is that emerging markets towards the end of the cycle typically do really well. I think China will actually do well. I have a decent amount of Chinese equity exposure through the indexes. I've spoken about it in the Discord, and that's because I believe towards the end of a cycle, you'll see the rotation into emerging markets. But China specifically is interesting because of the AI race. I'm working on a video for my AI Edge channel on China versus US. China is a very silent but pretty deadly superpower in that space, and you might see that come true soon, and that could be an interesting thing for their market. In terms of altcoins, before I head off here, I just want to briefly touch on where things are standing. Ethereum is actually at an interesting pivot level. So we discussed the 90K pivot on Bitcoin. The same pivot on Ethereum is at 3,050. Others actually had a daily flip as well. So this is a downtrend that's now flipped into an uptrend. So this combined with the fact Bitcoin could be about to have a breakout are signs that we could see a move. I just think it's important not to count your chickens before they hatch, because crypto's faked us out a lot recently. So you want to wait for confirmation. Obviously, I'll be here to tell you when I do believe that's the case and when I've got more risk on into the market, but you typically want to wait for confirmation, especially with altcoins, but this looks good. And if you were long Ethereum here, I think you have a really easy inval below $3,000, like a really, really easy inval. Although the stopgap is a couple of percent. So you have to weigh up whether you think that makes sense. And then just to get, the wheels turning, I spoke about some of these in my predictions video, but I just want to go through some of my top narratives from 2026. I already posted this a week ago in the Mars High Club if you're in there. And in MHC, by the way, we're going to be posting individual spreadsheets over the next few weeks with my top picks from every narrative. So even though the market's not hot, we're going to make a lot of money, in my opinion, this year. MHC will be in the description below if you want to come and join. It's a high ticket product, but it's for really serious people that are serious about crushing in the market. And that's why we've set up the infrastructure, with myself, with Fabian, with Dude, with Paradise, with Morin. I think the people that really maximize the group get a lot out of it. So if you're serious this year, I highly recommend taking the plunge and joining Mars High Club. But even if not, I'll give you a bit of a sneak peek into one of the posts I did, followed by like a 14-minute voice message that day. But I think AI agents are going to be a big narrative. Neobanking, big narrative. There's even airdrop farming opportunities there. Like I know Cast, for example, there are a couple of new ones I'm seeing as well, have opportunities to farm an airdrop. So look into that, especially if you're doing normal banking anyway. Could be an opportunity. A lot of the card cashbacks are insane as well. Perps, specifically the equities perps, and the metals perps are very interesting. Prediction market's clearly going to be a big trend. There's a few upcoming ones which I'm looking at. Obviously, Space is one that I've invested in that allows you to basically leverage against prediction market, or take leverage on prediction market bets. So instead of a 1x, which would be buying a share on a prediction market, you could take up to a 10x, which I think is pretty crazy, pretty degen, but clearly with the volatility that we're seeing in the news cycle, volatility that we're seeing in markets in general, that appeals to people. So I totally think there's product market fit there. So definitely look into the adjacent prediction market protocols to Polymarket and Kalshi. And then privacy is obviously massive. I mean, Monero and Zcash are the biggest. Zcash is, I'm still bullish, even though there's been issues recently. A lot of that was just like news. The protocol is still operating fine. So a thesis hasn't changed there. Monero is massive as well, but it's been on a massive run. I wish I caught it, but then again, like it's just one of those outliers in the market which just ran. So, if you missed it, I don't think there's a reason to necessarily FOMO into it, but just keep your eye obviously on that space. And asset tokenization as well, I think will be a big trend. So as I said before, we're going to be releasing the spreadsheets for each of these sectors in the Discord. And this will include a lot of the proprietary alpha we're getting. So one thing, and the reason why we haven't posted the spreadsheets yet, is because the research team and myself, we're getting on calls with teams all the time. In fact, I'm actually 24 minutes late. I just delayed a meeting with a team that's building something really, really cool in the privacy space. So I'm meeting teams, and straight after this, I've got to get into that call. I'm meeting teams all the time. I'm getting alpha all the time, and I'm going back to old protocols that I've been interested in, and I'm seeing what's developed so I can actually coordinate this list, because there's a level of information you're going to be able to get through liquid markets, but then actually speaking to people, networking, and that's something I've been able to leverage with my brand in the space. That is a really, really powerful way of getting alpha. And of course, I give all of that alpha to people in the Mars High Club, which is something that's giving you a material edge, even without you having to build that network or that edge yourself. So I'll leave a link in the description below if you want to check it out. Nonetheless, all those spreadsheets will be dropping in the group. We're just taking our time to build them and really collate something good, not just like rushing picks, because I can rush calls all day, but I really want to give you guys good information. And yeah, that's pretty much it for now. Subscribe if you're not subscribed already. If you made it to the end and you're not subscribed, make sure to join the fam, and I'll see you in the next video. Have a lovely rest of your day. Peace out.